Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. It's been another big week in markets, and there is so much to talk about. In this episode, we're going to talk about some new ETFs that have come to market, all focused on defense technology. We're going to hear some more investor confessions, but to kick it all off, we're going to start with some news that has caught our eye.
Let's do it.
News and markets.
So it's been a big week, Ren, for Elon Musk. Two news stories that have captured the attention of the world, one of which has had a positive note, one of which arguably has had a negative note for Elon.
Yes.
So let's start on the positive side.
Yeah, well, SpaceX, I think, just continues to be an amazing company. Elon owns 42% of it, and I think like 79% of the voting shares. So it just continues to do things that have never been done before. And so this week they completed their 5th test flight of its giant Starship rocket, like the big one that Elon wants to get to Mars one day. The spacecraft took off, detached from its booster rocket, and the spacecraft then landed itself on the Indian Ocean on a platform, which is something that they've been doing for a little while now, but like even that in and of itself is amazing. But what they also did this time is they caught the booster rocket. And I do mean caught. If you haven't watched the video, imagine two giant mechanical arms as part of the launch mechanism, I guess like chopsticking this booster rocket, catching it between its two giant mechanical arms. This is just another step towards fully reusable rocket technology, reusing every part of the rocket for future flights.
Yeah, it's a pretty phenomenal video if you watch it. And I think just to elaborate on that point, Ren, traditionally when you would send a rocket up, that part of the I guess the rocket, the booster, traditionally falls away and disintegrates or falls into the ocean or whatever it may be, which is why it's always been so expensive, and SpaceX have been on this mission to make it as cheap as possible, and this is certainly one step closer. It's phenomenal.
Well, to be clear, both the booster and the rockets were single use back in the day, and now the rockets are reusable, and Blue Origin and SpaceX have both been able to do that. And now the boosters they're catching. So it's like, it is cool. It's just, for decades, there was no progress in terms of like making rockets reusable. And like Elon, to his credit, and Bezos, to their credit, they've invested and they've got teams of incredibly smart people, and they've solved a big problem, and it's making space travel cheaper. So it is exciting.
So it has obviously done wonders to the valuation of SpaceX, one of the most sought after private companies in the world for many investors. They recently did a tender offer at a $210 billion valuation. To put that into context, it is the second richest of the private companies, with ByteDance recently valued at $230 billion. They are the owner of TikTok. So big money. It's unlikely to go public, though, you would think, with Elon having been burnt many times in the past.
I think so. So if you go back to Elon's earliest days, Zip2, the first company that he, his brother, and some another co-founder started, he tried but failed to become CEO of Zip2. Then X.com, which he started after, which he merged with Peter Thiel's PayPal. He was eventually forced out of X.com. And PayPal, and so there's perils of being a public market CEO or being just, a non-majority shareholder, and so it feels like for something like SpaceX, Elon's going to try and hang on as much as possible, and then the only reason that you would really go public is if you needed access to capital.
Don't need it.
Or if you needed to give early shareholders and employees liquidity.
Don't need that either.
And there's plenty of capital in private markets. And then the way that they do liquidity for shareholders, this is how that $210 billion valuation came about. Every 6 months, they just agree on a valuation and they agree on a buyer. And it's normally like a big asset manager, like a Fidelity or someone like that. and then anyone who wants to sell their shares at that valuation can.
Yeah.
Which is a pretty neat way of
Yeah,
doing
it is. No need for private markets. This
No need for public
markets.
which is disappointing for us. But
This shareholding is what will make him the first trillionaire in the world.
yeah, that's not a crazy thing to say.
Yeah, I know, but it's anyway. But on the negative side, moving to another successful venture of his, Tesla, they came out and launched their cybercab at their, I think it was, what's it called? Their Wii Robot or what?
Yeah, it was called Wii Robot.
Wii Robot event. Yeah.
So for people who haven't seen it, the cybercab is their first like fully automated car, I guess, that they're proposing to make. Not like their existing Teslas, which they want to give a software update to make it fully self-driving at some point. This cybercab is a new model of car. So it'll have butterfly doors, which is similar to their like their people mover version, Model Y or whatever it is. But it'll have no steering wheel and no pedals. So like actually self-driving. And it will be priced below $30,000, launching in 2026. Now that is what they are proposing.
A lot of promises.
Do you think they'll deliver that?
Musk is very good at creating headlines, creating PR. He did the same thing with the Cybertruck.
Yes.
I don't think they'll deliver it in that time frame. They will deliver it, but they've also, I mean, they've made more electric cars, I think, than anyone in the world. So they know what they're doing. But these are quite lofty. Can be quite lofty promises at these events.
Electric vehicles and fully automated vehicles are different. My skepticism comes, I don't know if regulators are going to be approving a car with no ability
pedals.
to override the automated system. No steering wheel, no pedals. I don't think regulators are going to be there by 2026. I also don't think Tesla will be there, but that's a separate conversation. Tesla also launched a 20-seat Robo van. And they reintroduced their humanoid robot, an autonomous humanoid robot called Optimus. Elon, never one to shy away from a big claim, said Optimus will be the biggest product ever of any kind. What do you reckon about those two?
So to paint a picture, Optimus is like a human size functioning robot.
Think of like
people he believes people will interact with and get things done for them just like any other human.
To visualize it, think of like C-3PO from Star Wars.
Yeah. So it wasn't a great week, as we said. Shares in Tesla were down 9%, whereas investors in Uber and Lyft, they were breathing a sigh of relief with shares in both those companies rising 10%, obviously thinking that the cybercab is not going to take off. I don't really see the need for a 10% drop in Tesla. I don't like, sure, they've come out and said, here's our product range, but like, is it that big a deal? Do you know? Like,
Wait, what do you mean?
Well, like, why sell off that much? Like, they don't believe that it's going to happen. The goals are too lofty.
Yeah, because investors were disappointed.
Disappointed in what, I guess.
You get new information and then you incorporate that into your model.
I guess that's what I'm getting at is what was disappointing about it is what I couldn't really, like, that it's too lofty. I think it's too, like, they've taken their like.
I kind of know what you're saying. You're saying like the actual value of Tesla is not in these announcements, but in the existing range of electric vehicles.
Well, yes, but I mean, what you're doing is also looking at what they're saying is coming and how realistic is this, and
I feel like you're answering your own question there.
Yeah, but I don't like. Is it just if he'd said 2030, would it have been different? Is it just because
no? I think it's the disappointment came from how staged the event was and how little real progress was evident.
Yeah.
So it was like, you know, the cybercab, the Robo van, these are like prototypes of prototypes. These are like things that we want to do rather than things we have done.
Yeah.
And then there was a lot of criticism around Optimus because it was all very staged. They were all completely controlled by humans. And Tesla never said that they were fully automated at the event. There was a little bit of implication that the robots could do more in some of the videos that we saw. But to be fair to Tesla, they never said. I think that there was just disappointment that like there was a lot of theatrics and perhaps less substance
So just too early.
than people were hoping to see. Yeah.
Too early.
Yeah.
Okay, fair.
But like, what Tesla shareholders overreacting to announcements? Like, tell me something new. That always happens.
No. Yeah.
Yeah. But yeah, the idea is right now the company is an electric vehicle company that makes money selling, the Model X and the Model Y and the Model 3. But all of these bullish projections of Tesla, the reason that you get such high valuations from some people is because of what people expect in the out years.
Yeah.
And as you get more information on those projects, you readjust your models, how much money they think they'll make, when they think they'll introduce it, all of that stuff. And people obviously readjusted their models here and sold off.
Yeah. All right. Well, we'll certainly watch this space. We haven't even spoken about what's going on at Twitter, but that's a whole other thing for Elon Musk.
Yeah.
If you want to stay up to date with the headlines, make sure you signed up to our daily email where we send you headlines from around the world that we think are important. So we'll include a link in the show notes.
Let's ask the community.
Hey, Equity Mate.
I just had a question.
All right, well, Bryce, we've actually got 3 community questions that we're going to answer here. One we're going to answer quickly on the Arcadia takeover by Rio Tinto. And then we've got 2 questions on these new series of defense technology ETFs that have come to the Aussie market. But first of all, we got a question from Amy around the Rio takeover. She asked, can someone explain to me what happens to my Arcadia shares once the Rio Tinto acquisition goes through?
Nice. We spoke about this last week. Thank you for the question, Amy. Pretty straightforward. So the deal was all cash.
Yep.
So what's going to happen is you will get cash in your brokerage account once the deal goes through at the deal date. If it was all shares, on the flip side, you'd get shares in your brokerage account on the deal date. So yeah, pretty straightforward.
Yep. And sometimes it'll be a mix of cash and shares. And then in that instance, you'll get that mix on your brokerage account on the deal date.
Just like when Block bought Afterpay.
Yes. Yeah. And, for the all shares deal, I owned Slack. And then when Salesforce bought it, I then had 1 share of Salesforce after the deal date. So I think the important thing to know is you don't need to do anything. It's taken care of for you.
Yeah.
But what you should do is have a really clear record of the price that you bought the shares at, because your accountant come tax time is going to want, it can get complicated, especially if it's a mix of cash and shares. So just make sure you've got a really clear record so you can give it to your accountant and it's pretty straightforward, or you can do it yourself. Like when I bought Slack and then it got swapped for a Salesforce share, I'm pretty sure I could no longer see the average buy price of my Slack shares.
Yeah.
So I just needed to have a record of that.
Yeah.
I'm sure I could have gone into my brokerage history and found it, but just keep clear records. But you don't need to do anything other than that. Your brokerage account will take care of it for you.
I would also just say if it's all shares, make sure you actually want to own shares in the new company longer term, because you have the option to sell out before the deal gets done.
Yes.
All right, a couple of questions. So thank you firstly for sending that question in, Amy. That came through our Facebook discussion group. So if you're not part of that, head over and join it. So now we have 2 questions, both on the same topic. So we're going to listen to them. First one is from Reese, and then we've got one from Jason.
Hey, Equity Mates, it's Reese here, long-time listener, first-time caller. I have a question in regards to ETFs focusing on military and defence. In the last month, I've noticed a couple of big ETF providers have recently listed ETFs in this area. I wanted to get your perspective whether this is just a bit of an opportunity by the ETF providers, or if this is something that you can sink some funds into long term and expect some decent returns. Love to get your thoughts. Thanks.
Hey guys, I'm fairly new to investing in ETFs and I've been listening to your podcast to learn. I have a question about the new defence ETFs, particularly DFND, DTEC and ARMR. I'd like to get one as a bit of a satellite. DTEC, I believe, is the only one to have shares in Drone Shield, which is of an interest to me as this is the first company I bought. Just wondering if you have any thoughts on this or have researched it. Thanks, bye.
Love it. Well, thank you for the questions, Reese and Jason. If you would like to submit, head to equitymates.com/contact, or there'll be a link in the show notes to leave us a voice message. We love hearing from you guys. So let's kick into it. Let's start off firstly with the 3 ETFs that these guys are talking about. They've just come to market. We've got the Betashares Global Defense ETF. The ticker is ARMR. That was launched on the 4th of October, 2024. Then there's the Global X Defense Tech ETF DTEC, which was launched on the 7th of October, 2024. And the Vaneck Global Defense ETF DFND, which was the 10th of September 2024. So all within the space of about a month, Ren, we've got 3 of the large providers dropping defense ETFs. Seems opportunistic.
Yeah, it seems like they're probably responding to what's going on in the world.
Yeah.
Now, one thing we always remark on is the ASX tickers that these ETF providers are able to secure. They're always very on theme. So, before we get into the details, which of the 3 do you reckon got the best ticker? ARMR, DTEC, or Defend?
ARMR or Defend?
Yeah. I quite like Defend, to be honest.
Yeah. I can see DTEC's an interesting one, though, because it's actually quite descriptive of the fund. But yeah, they've all done pretty well, to be honest.
Yeah, so, well, I mean, they're all... Oh, in terms of the tickets.
Yeah.
So, in terms of these ETFs, let's just rip through some of the key things that we look at. So the objectives, are they all trying to do the same thing? They all track their own slightly different indexes.
Yeah.
But in terms of the objectives, Betashares provide exposure to leading companies involved in the global defense sector. Vaneck, portfolio of listed global companies involved in military or defense industries. Sound pretty similar. Global X, a little bit different. Access to companies at the forefront of defense innovation.
Yeah.
Now, is that just a twist and they actually have the same companies under the hood? We will see. But yeah, they're more focused on technology and innovation rather than just the big companies in the space.
I think also importantly, when you do look at this, you need to go under the hood for the Betashares one as well. They only have to pass a hurdle of 50% of a revenue needs to be tied to the defense sector. So don't think that these are hardcore in all way, shape and form access to defense.
I actually think that's the same in Vaneck.
Okay, yeah, that makes sense because they're very similar.
And I would hazard a guess that there's probably a similar rule for...
They usually are with
X.
these thematics because it's hard to get companies that are 100%.
Yeah, so the question is Boeing. Like,
yes.
does Boeing is a defense contractor
Yeah.
that does do a lot of work for the US government, but you wouldn't expect to see it in a defense ETF.
No.
And that's sort of how you screen out some of those.
So the next thing we look at are fees. So ARMR, the Betashares one, is 0.55%. DTEC by Global X is 0.5%. And Defend by Vaneck is 0.65%.
So on the higher end.
Yes, certainly on
For,
the higher end.
yeah, for thematics. Now, top holdings. So if you go to the ETF issuer's website, you can see the full list of holdings. I'll just read out the names and then we can discuss anything that stands out. So Betashares in order of biggest to smallest in the top 10. Palantir, Lockheed Martin, Raytheon, Safran, Northrop Grumman, General Dynamics, BAE Systems, L3 Harris Technologies, Rheinmetall, Leidos Holdings. So some familiar names, some less familiar names. If we go to Global X, Lockheed Martin, RTX Corp, which is actually Raytheon for people playing along at home. It's the same company. Then Palantir, Northrop Grumman, General Dynamics, BAE Systems, Leidos Holdings, L3 Harris Technologies, Parsons Corp, BWX Technologies. So if we just pause there, like some pretty similar names in both of those two ETFs.
Yes.
Now,
Palantir gets a run.
Palantir does get a run.
Yeah.
Let's touch on that in a second. I think it's worth just noting, though, that we said that Global X has a slightly different bent.
Yep.
They're talking about defense innovation and defense technologies. But the Betashares and Global X top holdings, they look very similar.
They do.
So that's an important thing to just note. Vaneck top holdings, though, they look quite different. Palantir, Leidos, Booz Allen Hamilton, Thales, Curtis Wright, Leonardo, BWX Technologies, Kaki International, Huntington Ingalls Industries, and KBR. So Vaneck, they say their objective is a list of global companies involved in the military or defense industries. And if you're buying that, what you'd expect to see is companies like RTX or Raytheon, Lockheed, Northrop Grumman, General Dynamics, like the big defense contractors. None of them sit in Vaneck's top 10.
Yeah, which is interesting. So then you got to look at what index they're tracking underneath. That's going to be this. That's going to be the story to this. There's only 28 holdings in the Vaneck, whereas the Betashares has 42 holdings in total, and Global X I think is about 35.
Yeah, and Vaneck, it's not just the top 10 doesn't have those big names. Those big names are not in the 28 holdings in the ETF.
No.
So, I mean, obviously everyone needs to make their own decision about what ETF is right for them. But I would say in terms of being not really true to label and the highest fee, I'm probably putting a line through the Vaneck one first.
Nice. Okay, well, fair call, Ren, putting a line through that one. How about performance then? How have they differed in performance between? I mean, they haven't been out for very long, to be honest.
So I think
a couple of months, so it's a bit unfair, but
none of them have enough time to. I mean, no, some of them have only been out for a week.
Yeah.
So Betashares and Vaneck, full credit to them, they actually track the index hypothetically back over a few years.
Yep.
So Betashares go back to 2017 and say, if this had been an ETF, like how has this index gone? And then Vaneck go back 3 years. Global X have just got nothing. Betashares over the past 3 years, 22.9% a year. Vaneck over the past 3 years, 26.7% per year. Betashares since back 2017, so almost 7 years, 15% a year. So they've done pretty well, these thematic ETFs.
Pretty well, but I think almost in line with S&P 500, for example.
True.
Yeah. So
True.
like,
that is very true.
I don't think major outperformance at all. I think back to the questions like, is this a good time? Should I be thinking about these long term? And I love Drone Shield, so should I be buying them?
Well, that's an easy one to answer.
Yes.
Drone Shield is 0.15% of the ETF.
Yes.
It is not going to move the ETF.
No.
So if you want exposure to Drone Shield specifically, don't do it through this ETF. Just buy Drone Shield.
Yes. Yeah. In terms of the should I be buying this for the long term, etc., like as we say with all things thematic, these shouldn't be thought of as bottom drawer core portfolio positions. It might be a coincidence that 3 of the major providers here in Australia have launched around the same time in an environment where this thematic is very front of mind, and there are a lot of companies that are front of mind, i.e. Drone Shield, one of them, that have been doing very well. And it is the job of these providers to release products that are in the investing ecosystem and front of mind. Like, that is their business. To expect that these growth rates continue and all of those sorts of things, I think just buyer beware. Thematic ETFs come with the risk that you need to, I guess, stay attuned to what is actually going on with that thematic. Don't put them in the bottom drawer and let it go.
I'm going to go harder than that. I don't think this is a good thing. Like, so thematic ETFs make sense when you say a rising tide will truly lift all boats. You know, like cybersecurity spending is rising across the board, and every company, all these cybersecurity companies are seeing revenue increase because it's just like across the board more spending and everyone's benefiting. I don't think you say that about defense industry spending. I think what you often see is that there are big winners and losers. Like, there are big bulky contracts, and some companies do particularly well and some companies sort of are out of favor. And if you want to ride the defense industry thematic, it's probably worth just doing the work and figuring out which companies have technology which is in vogue. And, you know, Drone Shield is in vogue because drone warfare is emerging in Ukraine, or Raytheon, or now RTX Corp, is in vogue because a lot of their missile technology is sort of being used in the Middle East. A company like General Dynamics, which I'm pretty sure has a lot of tank contracts. You know, tanks were really out of favor, but now we're seeing tanks come back into favor in Eastern Europe, and so maybe they'll do well. But, you know, Lockheed Martin, a lot of their revenue comes from the F-35 fighter jets and you know, what's going on there. Like, you probably want to be a little bit more specific if you want to play this theme, rather than just assuming there will be a general increase in defense spending and everyone will benefit, because I don't think that's how it really plays out.
Well, thank you nonetheless for your questions, Reese and Jason. As we said, if you would like to ask a question, please leave a voice note. We love hearing from the community and playing your questions on the show. There will be a link in the show notes, or you can head to equitymates.com/contact.
In the confession booth, everything is anonymous.
This is a segment where we love finding investor confessions, both from the community and from plenty of spicy forums online, Ren. And today we've pulled a few while we've been...
Spicy forums online It just like that makes me think that you're going on a whole other type of forum online.
True. We've got 3 today that we have come across in the past couple of weeks that might relate, but otherwise are just good stories and good confessions. So if you would like to leave a confession, you can leave it anonymously. Head to equitymates.com/contact and we will make sure it gets on the show. But Ren, let's kick it off.
All right. So confession number 1. Hi guys, my tax return has been pending for 2 months with an estimated return of around $600. This morning, the Australian Tax Office deposited approximately $12,000 into my bank account. What's the chances it is a mistake and they'll be wanting it back? If I buy a Camry, will they let it slide?
Love that. Found that online. Love the fact that if you buy the whole idea of buying a Camry, might the ATO might be like, yeah, all good. No, I like this one. This actually happened to me in university.
Really?
Not from the ATO, but in a role previous to university. I used to work in a corporate job or at a corporate. While I was at uni, week, I got multiple like $3,000 or $4,000 payments over like 3 or 4 weeks.
Okay.
Stoked because it always happened at the end of uni night. So I'd come back from the pub, thousands in my account to the tune of like 9 or 10 grand.
Wow.
And I asked one of the law students, what's the deal? And he said, if there's a period of time where they don't ask for it back, it kind of legally becomes yours. It's quite a long period. Only if you've gone to them as well and been like, hey, here's the deal. So I was
going to say, you're speaking to a law student in the first week of uni.
At the pub.
And I reckon I know who you'd ask.
No. He was 3rd or 4th.
Was it? Okay.
No, it wasn't our friends. But I also emailed them and I said, hey, this has happened. They said they'd look into it, blah, blah, blah. Never happened. And I inevitably spent it all on it.
Oh, you kept it?
Yeah.
Oh.
Kept the whole lot. They never asked for it. I sent them multiple emails, gave them the opportunity.
Wow.
And nothing happened. And I bought some DJ decks. I went overseas.
Okay.
Anyway. So take that with a grain of salt, whoever sent this confession.
But, I would say don't follow Bryce's lead. My sister, when she got her first job out of uni, they forgot to put the decimal point in her pay packet. Oh, they figured it out pretty quickly.
Yeah. Nice.
Yeah, but I think it was a big shock to her, that first pay that she got.
Yes, I imagine.
Nice. All right, one more confession. This is a bit of a longer one, so bear with me. Back in college, I had a stable part-time job for quite a while, and hence I had a pretty decent credit score for a college student. I was driving a nice luxury car, but it was just a used car bought with a car loan. It was a somewhat irresponsible car loan, but not outrageous. I also had several gold credit cards that lined my wallet because my credit score was good enough that banks would issue me gold cards. So once in a while, some friends would be amazed that I had multiple gold credit cards when I took out my wallet to pay for something. The reality is that my part-time job, even though very stable, only pays enough for me to get by, but certainly not to live a luxurious student life. I had a girlfriend who was somewhat materialistic, and up to this date I still believe that one reason that she was with me was because she thought I was rich enough, or my family was rich. Anyway, when we moved in together to a higher end apartment, she thought we were living a good life, relative to most other students. The secret was that she didn't know my salary from my part-time job was impossible to sustain in the long run, the higher rents, as well as all the entertainment expenses that she wanted to have. Once every 2 to 3 months, I would end up short on money. In hindsight, I was smart enough not to load up on my credit cards, even when I was trying to keep up with the false image that I had created for myself. So what did I do when I was short on cash and I didn't use my credit cards? This is where my confession and regret are.
Uh-oh.
My then live-in girlfriend's family is actually quite well off, and they always kept her bank account with a fairly high cash balance. Most times, she didn't even have an exact idea of how much cash she has in her bank account. Since she thought that I was rich, she trusted me with her bank account. Once in a while, when she was too lazy to make a bank run, she would ask me to withdraw some spending cash for herself from her own bank account by giving me her ATM card and the PIN. I always made the withdrawal for her, and I would give the cash and the printed receipt so that she could see I withdrew exactly what she asked. During the month that I knew I was about to be short for rent or car payments, I'd find good opportunities, such as when she was taking a long afternoon nap or she slept in on a weekend morning from partying the night before. I took her ATM card from her purse and went to withdraw a few $100s from her bank account. At the time, I justified it by telling myself that she didn't pay rent or food when we lived together. Still, deep down inside me, I knew I was stealing from her, period. I stole from her bank account, on average, about once every 2 to 3 months during the 2 years we lived together. I was smart enough or calculating enough not to be too greedy, and I always only took what was necessary at the time. Never more than necessary. And that practice kept the stolen amount low with respect to her bank account, and that was the key of never drawing any suspicion from her. After I graduated and got a pretty good paying job, I no longer needed to steal money from her bank account. The irony was she eventually still left me to be with a much older, financially better off guy.
There you go.
There you go.
Why is this guy running everything in cash?
Why is this guy confessing this to the world?
I know. What on earth?
I mean, don't steal from your partner.
Don't steal from your partner, yes.
Yeah.
A lot of dodgy stuff there. But thank you for the confession nonetheless. As we said, we found these on some forums going around. But if you would like to submit a confession and have it read out on the show, or if you would like to leave a voice message of your confession, head to equitymates.com/contact and we'll get it on the show.
Yes, yeah. Well, but Bryce, that does do us for this episode. We'll be back in your podcast feed tomorrow with an interview with Soren Robo, who is a portfolio manager at Brandywine Global. But until then, thanks for listening.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.